Here's a nice example of a hybrid trade. This one is, in fact, a weekly down to a daily execution hybrid. So we're looking here at the weekly time frame on the Euro NZD. And you can see that both for channel traders as well as if you are a pattern trader, this applies. And why is that? Well, here on the selection time frame, the higher selection time frame, being weekly, we can see that we are in a potential trend. And not only that, but we are outside of our HTC channel, and you can see the support level for that here on the weekly time frame. And we're in we have been in a phase 2 of this particular trend or potential trend. If you are looking for your patterns, this is a potential class 1 pattern. Obviously, it doesn't look like that at the moment, but we need to remember that we're looking for what it's going to look like after the retracement wave comes to an end. And it looks like, unless something really dramatic happens, it looks like this high is going to be ringed by the end of this week. So that's the higher time frame. Remember, we're looking for a continuation of an existing trend with the hybrid. So we need to be in the phase 2 or retracement wave of the higher time frame trend. So dropping down to the daily time frame, you'll see that this has progressed somewhat already. So I'm a little bit late with doing this recording. But here on the execution time frame, you'll note that our low time frame selection criteria include a breakdown of the cyclicity of that retracement wave on the higher time frame. So this is a single retracement wave on the weekly, but on the daily, we can actually see the cyclicity. And the cyclicity broke down once this high was ringed without this wave being a phase 1 wave. And why is that? Even though it's longer, the market failed to close above the previous wave high. That means that once that high was ringed, it confirmed this as a retracement or phase 2 wave. A lot of people, remember, make the mistake of assuming that this is a phase 1 wave simply because it's longer. That is not the case at all. The fact that the market failed to close above that high means that this resistance level was respected, giving us an indication that this bullish cyclicity had broken down. Right, so the final piece of the puzzle then is to have an impulse candle in the direction of the resumption, which of course here would be bearish. Now, this is quite a good teaching example because this candle here, which is a high test, obviously, or inverted hammer, looks like it's a bullish candle, but in actual fact, it only looks that way because we had a gap from the close of the previous candle to the open of this one. And if you take it as the close, or the open of this candle being the close of the previous candle, clearly this would be bearish. Either way, the close of this candle is below the close of that candle, and that is what's really important here. So that gave, and not only that, it's a close below the previous low. So this is a bearish impulse candle. So hopefully that's clear. Our original stop, of course, was above the previous swing high. The entry was at the open of the following candle. So that's the initial entry and stop. And of course, this is a standard target for a hybrid, being the ATR on the monthly time frame, because you've got to go up 2 time frames for a hybrid if you're using standard targeting. If you want to use the advanced targeting, obviously, then you would be using the 2 5-step rule. And that would be, that's covered in that separate training. But this is an example of where we're using the standard target. That leaves us with trade management. So the original stop being all the way up here. Using that 2 5-step rule, we were able to trail the stop day by day very quickly all the way down to break even. And in fact, we got to break even once yesterday's candle had closed with a marginally lower low. So using the 2 5-step rule, we had break even on this trade. It's looking good at the moment. Obviously, we don't know what the final outcome will be. But there you have a pretty textbook example and a good teaching example of a bearish hybrid.